All right, thanks everyone. Hope you're all doing well. So let's talk about the S&P 500. So it consists of 11 sectors, and different sectors are in the driver's seat at different times. So this is the SPY, the S&P 500 ETF, Spider. That comes from Standard& and Poor's Depository Receipt, and this tracks the S&P 500. Now, because it's an ETF, we can get some good information about it. State Street Global Advisors is the people that back these, and we can come to the ETF fact sheet for SPY, and we could look at the holdings, and we could see the 11 different sectors. Now, some of these sectors are really small: materials, utilities, energy, real estate. They don't really affect the broader market, but we look at them anyway for trading ideas. Consumer staples is small. Wow, look at that. Consumer discretionary is past healthcare. That's a recent development. Up until about, I don't know, 6 months ago, healthcare was the second biggest sector in the market, and now it's the third biggest. But that's because it's been breaking down and consumer discretionaries has been going up, as we shall soon see. But consumer staples, even though it's small, sometimes you can get good insight into it or from it because sometimes money flows into it right before the market goes lower. It's your classic flight to safety. So if we look at the S&P 500, pretty quiet so far, hanging out right around this price level here, which we should probably write in. Let's see what that is. We're going to call it 585.70. All right. So resistance here became support over here. A lot of times when markets sell off, they'll find a support at a price level that had previously been resistance because people that sold here regret doing so when the price goes higher. So now they're trying to buy their shares back. So remorseful sellers from here placing buy orders here has taken resistance and turned it into a support level. So tech is the biggest sector in the market, not surprisingly. But as of right now, it's not really doing much. I would not say that tech is in the driver's seat right now. It looks actually pretty neutral to me. But you can see here finding resistance at a former peak. There's an old saying, sell at former peaks. And that's because when you get to a former peak, like here, you tend to get into resistance. And that's because you have people that bought back here who are trying to sell to get out of here. So we just saw seller's remorse. This is a form of buyer's remorse. Markets are driven by psychology. Don't get too caught up in fundamentals or earnings if you're a trader. I mean, if you're a longer term investor, that's different. But I mean, look at this. You don't need to be a chart guru to see that the tech sector found support at a former support level and found resistance at a former resistance level, right? It's pretty darn obvious. So NVIDIA is reporting this week. Now, there's an old saying on Wall Street. There's actually a bunch of old sayings. Some of them are dumb, but some of them make sense. There's something called the crowded trade, or buy on the rumor and sell on the news. And they each kind of refer to the same thing. Say everyone who wants to buy NVIDIA buys NVIDIA. Everyone has their portfolios positioned. They got the amount of shares they want, so forth. And the company reports blowout earnings. Well, if there's no one left to buy it, it can't go up. And then what'll happen is some of the people that bought it said, wait a second, these earnings were great and the stock is not going up. This is not acting the way I thought it was going to. I better sell so I get the hell out of this at break even. But they have a hard time finding buyers because the buyers are done. What do? They have to push the price lower. Now that happens. Oh, I don't recall. I don't remember exactly off the top of my head. Maybe here where Nvidia had to blow out numbers. And then you get on the media and you see all these people like, oh well, the earnings were good even though they were a blowout, but they weren't as blowout as people thought they would be. Blah, blah, blah. No, it's all about supply and demand. Oh, look at that. That's Microsoft actually was in a downtrend. I'm just looking at Microsoft, Nvidia, and Apple because these are the three biggest stocks. And yeah, so I would say tech is not in the driver's seat. Tech is neutral. Financials are the second biggest. And I believe these guys look pretty neutral too. Let's take a look here. Yeah, I mean, we had this big blast off after Trump got elected, and we've just kind of been going sideways ever since. So financials really kind of aren't even in the driver's seat. Now, you got to put this in the right order because I'm so used to going to healthcare next. All right. Consumer discretionary is this ETF, XLY. Now, this is going to be important to watch. I would say that This is in the driver's seat, or maybe we find other companies too. But look here, right? This is what we just saw: support at a former resistance level. Here you get resistance at a former support level. This is because people bought here that regret doing so when it goes lower, and they say, if it gets back to my price, I can get out at break even. I will. So this is also buyer's remorse. But what happens here is what happened. XLY. What happened is what happened. Yeah, it's like a song. Remember that show? What's happening? With rerun and Roger and Dwayne. That was pretty funny. So we get to a former resistance level. Now, some of the sellers might start to undercut each other. An interesting thing about this sector is it's very dominated by two stocks. So just like we can look at the S&P and see what sectors are in it, we could look at the sector and see what stocks are in it. So XLY is the consumer discretionary sector. Oops. And if we go down to the holdings, Amazon is 22% and Tesla is 17%. So you have two stocks that are 40% of this sector. Now, a big part of this move higher is going to be because of Tesla. Yeah, right. So look at that. And I mean, Tesla is pretty overextended, I would think, even though we have had a little bit of consolidation. A lot of times when you get this really choppy action, it tends to be bearish. It shows like a market that kind of lacks leadership. All right, Amazon. Yeah, now Amazon too is going to be interesting to watch here because it's sold off and it's gotten to a level that was resistance, right? So Amazon is the biggest stock in the sector that's in the driver's seat. So it's like if there's one thing to watch in the market, in the stock market, to get an idea as to where it's going to go, it's right here. If Amazon doesn't hold the support and goes lower, that's going to bring the whole market lower. All right. Next up, healthcare. This is all about like letting the market tell you what to do. Well, yeah. So look at this. Healthcare is really kind of blasted lower, which I don't know why. It was kind of counterintuitive. But anyway, all right. So you got Amazon at an important level. You got the healthcare sector at an important level. So I would say right now, healthcare and consumer discretionary are in the driver's seat, and Amazon is going to influence the discretionary sector. Let's take a look at what are the biggest stocks over here. Now, again, we could go to the ETF fact sheet for healthcare, and we could go look at the holdings. Eli Lilly, United Health are about 20% together. Yeah, look at that. Wow. Stocks have been in a meltdown. Jeez. Now look what's going on here, right? I guess I can get rid of this line. At a former support level, UNH. Let's see UNH. Yeah, UNH doesn't look as bad. All right, let's move on here. Communication services. When I was in my institutional days, this is something we would do at our morning meetings. Just look at all the different sectors to look for trading ideas. All right, XLC, had to move up, kind of consolidating. I don't really see much here. Consumer. This is the home of Facebook and Google. People think that they're in the tech sector, but technically, not no pun intended, they are in the communication services sector. Industrials. The industrials are looking kind of interesting here too. Yeah, now look at that. See, these guys look to be breaking support. So the market to me is actually, I don't know. I mean, I would be kind of short-term bearish here. All right, let's just look at these little guys. Consumer staples. Neutral, I would say. Energy is the energy ETF is XLE. This is a small sector too. Can you believe when I started doing this, energy was the biggest sector in the market? Just to kind of date myself back to the mid 90s. I remember when Ken Lay from Enron was in my office. Not well, I mean the office I worked at. I didn't meet with him, But I remember one of the analysts being like, "Oh, we got to invest in Enron. We got to invest in Enron. We got to invest in Enron." And I remember like seeing Ken Lay in the conference room. And then you all know the story about Enron, one of the biggest scams in Wall Street history. Real estate, neutral. Utilities, neutral. Materials, I would say this looks kind of weak, but this isn't big enough to drive the market. All right, so just to reiterate, I believe that the two things that are really important to watch are consumer discretionary, right? Look at this move. This has been a big part of the move up in the broader market. And Amazon is the biggest part of this sector. So I would say if there's like one thing to watch, well, let's say two things, but if there's one stock to watch, it's this right here. What happens with Amazon? And then what happens with the healthcare sector? So two things to watch going forward over the next couple of days or week or so to get an idea. If Amazon reverses and healthcare reverses off this support, well, then the market's going to move higher. If the support breaks, then the market's going to move lower. So Amazon, healthcare sector, that's what I'm going to be watching. All right. Hope this helps everybody. Thank you so much. I will see you soon.